Hi, this is Rob with Federal Finance CPE, and today we're discussing federal reimbursable work and how it's accounted for, getting down to the debits, credits, and transaction codes. We're going to be walking through an example looking at both the buyer and seller side, where one agency is purchasing from another without an advance. We're going to get to the details, so let's get started. For today's setup, we're going to have two agencies. We're going to have NOAA, the National Oceanic and Atmospheric Administration, and NASA, National Aeronautics and Space Administration. Now, what NOAA is buying is satellite services from NASA. Does this really exist? I don't know, but I'm really excited about NASA, so here we go. And the agreement they're having is for $500,000. So just use this context. NOAA is buying from NASA. NASA provides satellite services. NOAA needs a satellite into space. Now, if you like federal CPE and you need it for yourself or your team, check us out at federalfinancecpe.com/free. Sign up, get your first course free, and then you can try some more of the courses we offer. For our exercise today, I want to show you a standard format I'm going to use just to help make this process go better, and we know what we're looking at every time. So you'll see here at the top, I have 4 boxes: authority, agreement, performance, and closeout. Now, to me, these are just general phases of reimbursable work. You're not going to find this anywhere particularly, but it helps me think about it. It's authority. Are we recording our authority? The agreement part. How are we recording our agreement? Performance, when you're doing the work, and then closeout. Now, you'll notice here too, we have our two sides of this debit and credit and transaction codes. We have the ordering agency, so NOAA, and we'll have the providing agency, NASA. You'll see both debits, credits, and whatever transaction codes we use. Occasionally, we're going to only focus and show one side just because there's a lot of transactions happening. So let's get started with our first thing. So NASA receives an annual appropriation that's provided appropriated funds, and they receive a warrant for it. So let's look at this $900,000. You'll see here. So this is the authority part, right? We're talking about budget authority specifically. Now, NASA gets their appropriations, and it's unapportioned, and they get their 1010 fund balance with Treasury. All right. The next stage is NASA anticipates $500,000 in spending authority from offsetting collections, or as we commonly call it, reimbursable. This is our reimbursable authority. So once again, authority part, we're recording our anticipated reimbursements, so our 42,1000, and it's unapportioned. So just remember that we have no apportionments yet, but recording our budget authority. Now we get it apportioned. The Office of Management and Budget, they apportion the funds. So they're going to be apportioning both our direct or appropriation, $900,000, and our request for reimbursable work, right? We anticipated $500,000 and we wanted to get a portion for spending authority from offsetting collections. Now, real quick, remember, there's only 4 types of budget authority, and we have 2 of them right here. The other 2 are borrowing authority and contract authority, but that's for another conversation. All right, because I'm a visual learner, I just want to show everybody, this is what a SF-132 or apportionment schedule looks like. Now, this is completely fake. I made it up myself because there's no such thing as the Office of Satellites. You'll see here, but this is where you'd see the apportionment data. You'd see the TAFs, you'd see the, this is NASA, you see the Bureau, and then we'll see the iteration. This is our first one. And here on this particular line, you can see budget authority. It's discretionary, it's appropriation. Now we have budget authority, spending authority, anticipated collections, reimbursements. Great stuff. Now we have, and that's our total budgetary resources available for the entire year. Now we're going to see our budgetary resources available. Now we only have it apportioned by programs. So we have direct program and we have reimbursable program. You'll see we have a total of $1.4 million. All right, that's great. Okay. Now, for this particular entry, we're going to have 2 transaction codes. The first, we're going to be apportioning our direct funding, so our apportionments. So you can see this, we go 4450, 4510. We have that unapportioned. Now we're moving entirely to apportioned. And then we have our reimbursable with anticipated resources unapportioned to apportion. Now, notice here we have a D and an R. Now, those aren't accounts, GL accounts specifically, but those are attributes for a GL account, whether it's direct or reimbursable. Very important to note, as it dictates the type of spending and funding you have, right? Okay, the next step is allotment. So the NASA administrator allots our funds that are apportioned. There we go. You can see right there, we're moving from those apportionments to allotments. Okay, at this point, we are ready to go. Our budget is loaded, quote unquote, down to the allotment. It can be, committed, obligated, and outlaid. And we're ready for both direct and reimbursable. Okay. Now remember, we're in the Office of Satellites, so our business is to, we send satellites up. So we're just, using our appropriated funds to buy supplies for that, right? So we ordered some launch equipment. You'll see here, we reduce our allotments and have our UDOs of 480100. We do a $900,000, so the entire amount. Now we receive our launch equipment that we ordered. You can see we flip our 4801 to 4901, right? We received it. It's unpaid. We record our equipment. We record our expended appropriations used that are accrued. And since there's equipment, we have a memo entry to make. Now we pay for the launch equipment, just continuing to moving down. Once again, flipping those budgetary entries from 4901 to 4902. And we're recording or reducing our payable that we accrued in the last one and reducing our fund balance for treasury. And you'll see also we have our moving our expended appropriations used accrued, expended appropriations dispersed. Okay, now here's the fun stuff, right? NOAA enters in an agreement with NASA to launch a satellite for $200,000. Which everyone's at NASA is excited, NOAA's excited. Newest satellite there. Maybe it's for science, maybe for space and weather. All right, so what does that mean really though? So for them to enter an agreement, functionally it means they need to both agree on the general terms and conditions, and secondly, they need to put it in order. Now, this really means you're going to be involved in G-invoicing. This is where federal agencies formally document their general terms and conditions, and then they put orders into each other. It really helps agencies track their orders, and also with the thinking of this reimbursable work between agencies, ultimately it needs to get eliminated for the government-wide financial statements. So this also helps. Treasury manages this way. If agency A owes money to agency B, also records that same amount. It just makes sure the elimination is going way better than it used to be. Okay, so now let's look at it. Now let's look first from NOAA's standpoint. So they ordered, right, $200,000 of services. So you can see they move their allotments, realized resources, to 480100, the undelivered orders. Now, for NASA, we showed all of the budget loading all the way down. We're not showing that for NOAA. We're just assuming it all happened, right? Now, for NASA, what do we do? Well, first, they have to record their order. So we have a recording with reimbursable unfilled customer order without an advance, right? They got that $200,000 order. They're recording it, and that's a budgetary entry. The next thing they record is that, along with it, is the anticipated reimbursement. And we're thinking that they're saying, hey, we got an order, we didn't get an advance, and we haven't filled it, and we expect to get that $200,000, right? Next, now we look at our apportionments. So they apportion that anticipated resources program subject to apportion, and it gets moved down to the apportion 4510 with those R's. So just that was two things. One, we recorded our apportionment, right? So we know that $200,000 is going to be spent. And then we also recorded our unfilled customer orders without an advance. Those two things need to happen. Just remember that. All right. Now we record the allotment of authority, the reimbursable. Once again, we're moving from, appropriation, apportion, allotment, then you get obligate, right? So this is where we go. 4510 apportionments, reimbursable. We're moving it to allotments, realized resources. Okay. Now, NASA, while they did purchase some things for launches, like the equipment, they need to buy some supplies for the launch. They don't have an inventory sitting there that they use for every order. So they're going to order some specifics for this specific order from NOAA. So you'll see here $200,000. All right, they're loading it down. So they have 4610.0 and they're recording 48010. And if you really think about this, NOAA's getting a great deal, right? They had an order for 200,000 and they're only paying for these supplies for the launch. It's like NASA's doing them a favor. Say, hey, you can use our equipment for free, but we're only going to charge you for the supplies. It's a great deal if you can get it. Now, NASA received the supplies for the launch. You'll see here, and we made this one a little bigger because there's a lot going on. We have our, 4801 to 4901 obligations, undelivered, unpaid, delivered, unpaid. And this is always a great thing to remember is you could have 4901. That should align with AP, right? Delivered, unpaid, accounts payable. But we record our expenses, we record our payable, and we move our, unexpended appropriations used accrued, expended appropriations used accrued. All right, NASA now pays for the launch supplies. Moving 4901 to 4902. We're reducing our payables and reducing our cash fund balance with Treasury. And then we record our, expended appropriations, unexpended appropriations used accounts. And this is in our performance, right? We're performing this particular order. All right, now we are launching. NASA launches that satellite for NOAA. So this is the performance, right? This is what NOAA paid for, satellite services. So let's look on the left side for NOAA. So for them, right, they had undelivered, unpaid, 4801. Now they have delivered, ordered, unpaid. So then they're moving, 4801 to 4901. They also need to record their expense, right? They accrued an expense. This service was done for them, right? So they record their 200,000 for that order, and they record their payable, right? 4901 2110.00 should line up, and then they have their unexpended appropriations used accrued and expended appropriations used accrued. Now on NASA's side, there's a couple things going on. I'm going to first hit the proprietary accounts because I think that's easier to understand before we go into budgetary. But proprietary, right? They provided that service. They've already recorded the expense, right? So they're recording their receivable, 1310.00 accounts receivable, and they're recording their revenue from services provided, right? Very standard commercial accounting stuff, right? Now, what they have up here at the budgetary entry is we are reducing our balance, we're crediting our balance of unfilled customer orders without an advance to reimbursements earned receivable. Now think about that. So we had unfilled order without an advance. So they had an order, we didn't fill it. Now that we've performed the service, we've filled the order. So that means reimbursements earned. It's a receivable. It makes it easy for us. Just those are things you have to think. It needs to happen when the service is provided. I know some agencies have some older financial systems that make this more difficult, but just conceptually think of it. Once we sent that rocket into space and that satellite, we provided the services, we've earned that receivable. Not when we bill it. That's not cash basis. We're doing accrual. Okay, the next step though now, NOAA pays NASA for the launch. Okay, so on NOAA's side, when they move it from 4901 to 4902, you have your obligations, delivered orders unpaid to delivered orders paid. We reduce our accounts payable, we reduce our fund balance with Treasury, and then we make our appropriate entries with unexpended appropriations used, dispersed, unexpended appropriations used, accrued, you see there. Now with NASA, what we need to move now is, so NOAA paid us, right? They gave us cash. So on the budgetary side, we need to reduce our balance for reimbursement earned receivable, which would align, right, with your AR. And you move it now, essentially that balance is recorded and reimbursements earned collected from federal / non-federal exemption sources. So we had reimbursements earned receivable. Essentially, it's the budgetary AR, right, to reimbursements earned collected. Now you'll see here, we have our, we recorded that cash coming in, fund balance with Treasury. We recorded the AR being reduced as it was paid. And then we have our expended appropriations dispersed and unexpended appropriations used dispersed. All right. Now, that was really quick. We went through one, very easy and simple example, but I wanted to throw one thing in there. Let's just say you get to the end of the year, no other orders were made from anyone. Things do need to happen, and we're going to talk about that. So NASA needs to adjust their anticipated orders not realized and apportionments unavailable to zero at year end. Why is that? Just conceptually think of it. If it's at year end, nothing's going to happen. So you shouldn't be anticipating anything, right? It's year end. Nothing can happen. It has to happen next year. But remember, we had to get permission from OMB. You have to get it apportioned. So at year end, you move it to zero. What does that look like? So taking that step back, we have $300,000 in here where we're reducing our anticipated reimbursements and apportionments, anticipated resources. Remember, we had $500,000 we started with, and only $200,000 was actually used in our reimbursable authority for the NOAA satellite contracting gig. So we reduce that balance and get it to zero. And now, you're going to have to do that. There's a little more challenges, right, when you have this, but just think the fiscal year, you need to have your anticipated reimbursements down to zero at the end. And you'll do this process of requesting OMB, making your estimates, getting an apportionments. And it's just like it's a annual task everybody in every agency has to deal with. Okay. Now, mentioned before, if you like federal accounting CP, we offer that at federalfinancecpe.com. We make it really easy. You get some videos just like this, and you earn NASBA approved CPE. I'm going to be stereotypical here as an accountant, say I really enjoy seeing the accounts in Excel. So we're going to do this real quick, and I'm going to walk you through so you can maybe see how the transactions actually stack up with everyone. All right, now we're back. Now, we're in our friend Excel. Everybody loves it. So real quick to orient you on what we're looking at is we have our transaction numbers in the purpose. It's going to match up to our slides earlier. And then we have the GL accounts. And also we have the agency, the providing agency or the ordering. So let's get started. Okay, so that first entry, right? We had NASA's annual appropriation. You're going to see here that fund balance of Treasury, our appropriations realized. We have our unapportioned authority, right? So let's see what happens next. So we had our anticipated $500,000. We need that request. You can see how we recorded that. All right. Now we had our apportionment. So you'll see here, I think this is just great to show that, we had our unapportioned balance and then it was reduced, right, as it was moved to apportionments, right? So you'll see that movement happening. Same thing right here. We had our anticipated resources unapportioned, reduce it, move it to apportionments, anticipated resources, right? The next transaction occurred. We allotted our funds. You can see here, once again, moving the apportionments down to allotments. Now, the next step is we ordered our launch equipment. You'll see here we move our allotments realized to undelivered orders. Now we received our launch equipment. A lot going on here. Once again, you can see our undelivered orders getting moved, undelivered orders unpaid, moving to delivered unpaid. Now I notice up until we still have only had NASA. Look, we paid for our launch equipment. You can see that reduction of our Treasury balance, 1010. You can see our 4801, 4901, great stuff being recorded. Okay, notice we have NOAA coming in. This is because NOAA entered an agreement with us, right? So we have our UDO is recorded because they entered an agreement, essentially a contract, right? An agreement. And we can record our apportionments, anticipated resources, right? It's moving down. We have our anticipated reimbursements, apportionments, great stuff. Now I know this is getting kind of big, but it's all good. So we record our allotment of reimbursable authority. You see, and just notice how things are getting moved, if you will, the balances of budget authority, which is important. We got to track that. Order our launch supplies. There we go. We received our launch supplies, pay for our launch supplies. So it's just moving those balances down. This is the big one. When you see that, we launched our satellite. We performed, right? So you'll see our reimbursable or reimbursements earned, recorded, right? For unfilled customer orders out in advance, AR, good stuff. Revenue, big thing. Remember, revenue is recorded when the services are provided. Just when in doubt, when you provide the service, you earn the revenue. Now down here, this is the first outside of ordering, right? NASA or NOAA, we ordered it. Now we received what we ordered. So we're recording that expense. We're recording that AP. Okay, next stage. All right, we're paying NASA. So NASA's, their AR is reduced. I mean, now NASA's getting their cash, right? 1010. They're making their other entries. They're reducing their AP balance. Or sorry, they're reducing their AR balance. Wrong side. Now the NOAA is reducing their AP balance. They're recording their expense. And they're moving their budgetary accounts for obligations to delivered orders, obligations paid. All right. And then a last entry, if you remember that here, this is us reducing, reducing our anticipated orders not realized. This is the end of the year, so we got to bring it down to 0. Let's see where we got. We have, okay, great. 0. Wonderful. Okay. With that, I want to say thank you again for joining us today at this training. I really appreciate it. Stay tuned to the channel. And if you want to get some high quality CPE, check us out at federalfinancecpe.com, and you can get all your training needs for you and your team met online on your own time. Thank you.